Hi, I'm Phil Grande. Welcome to my YouTube channel, The Unfolding of the Stock Market Crash. I'm going to identify for you today the components or the messages we get from the market that each time when these messages come together, that the market will crash. It's always been these same components. Once they come together at the same time, you get a crash. So I'm going to go over them with you. First of all, inflation is huge. We know that. So I don't have to go over the inflation. But when you have tremendous inflation and then at the same time, you got margin debt going through the roof. We've never had margin debt at $900 billion. Look at back here at the financial crisis, the housing crisis, bank crisis back in 2008, 2009, $400 billion. .com, $300 billion. We're pushing $1 trillion. You combine this with the fact that we have, and I'll show you right here, you combine that with the fact that we have home builder stocks are now starting to decelerate. They're starting to peak. Got to keep our eye on them, but they're starting to peak. At the same time, consumer confidence in buying these stocks, okay, are going down. Combine this, remember, the home builder stocks peaking, plus you got margin debt peaking. Now there's one more. Watch this. We combine that. This is all happening right now. Then we combine that again with the growth in our home values are going crazy. Okay, prices of homes are going up and wages are not. Inflation is outpacing wages. Now, let's combine that with the margin debt, with the home builder stocks peaking, with the growth in U.S. home values outpacing wages. Those right there, what I just gave you there, is sending you such a message that a market crash is on its way. And then finally, this is what I call my trend, my crash trend. Now, what's that mean? Well, everybody is looking at the stock market. They're looking at the wrong thing, because we all know the stock market has been going up because of the quantitative easing, these zero rates. Since 2008, the market's gone up 400%. Since 2020, let's say February, April 2020, the market's gone up about 40%. But now what we're seeing is this. The trend towards the crash is going this way, going down. One of the things we're seeing is if we draw the 50-day moving average line, what we would find is we got more stocks that are below the support than above it. That is another problem. On top of that, we got record high trade deficits, record high budget deficits, record high national debt, inflation the highest in 13 years, stimulus, QE, that's telling us we're on life support. We have debt to GDP ratio over 65%. We're at 161%. The average should be 65. What is that? The ability, we measure the ability for the country to pay its debt, for the government to pay its debt. We should always have debt to our growth of 65%. We're at 161. Monetization of debt. They're printing all this money. That's why they won't raise rates, keeping rates at zero, so they can go and buy the debt from the banks, the corporations, even the government, to keep propping up the market. Inflation is rising faster than wages. We have a tight supply of the economy. There's the demand side and the supply side. Okay? The supply side. We can't supply the products. And then, of course, the housing I told you starting to peak. This is what is going on. And we have not only our labor participation rate so bad, the labor nobody's participating. We have so many people that won't participate in the economy. They won't come to work because of the social programs in Biden's Build Back Bigger or Better program. People are staying at home. So while they tell you, and here's what they do, they mask all of this. Wall Street masks all of this by keep you focused on telling you that the stock market is the economy. So when people see the stock market go up, they think, oh, the economy's great. It's not the economy. Stock market's never been the economy. So again, when you put all this together, this is the trend. And you can see the trend, there's no question, we're heading towards the crash. You combine once again, as I said, the growth in home values outpacing prices. You can see the divergence. When you have a problem where we're seeing the housing stocks are starting to peak, at the same time, we see that the margin debt is peaking up here. That's the message from the market, and we got to listen to them, and we got to watch them. Inflation is getting worse. I'm telling you, inflation is going to get worse and worse. Because why? Because the progressives that are in the White House are trying to tell us that you can print all the money you want because there's no inflation. They truly believe this. When you print, they tell you it's only inflation occurs when you spend it on something. So they're printing all this money. They say, oh, there's no inflation there. And what they're going to do is, but when they spend it on a social program, they're telling us that the economy grows much faster when you spend money on a social program, expanding a welfare state, same thing Obama did, than spending money on productivity, new machinery, new equipment to produce, to increase wages, to increase savings, to increase our standard of living. There's, oh, no. That's not a good way of doing it. The economy will grow better with social programs. And, of course, the progressives, they believe in their mind that they've been put on this earth to take care of the poor, the unfortunate, the middle class. Guess what? They're not doing a very good job where gasoline prices are or where food prices. That's a bunch of crap. Okay, so now you can see we're getting closer and closer to a crash. Unwrapping, unfolding, whatever you want to call it. Please do me a favor. Okay, subscribe, like, and share. And join my gang if you're not a member. Try it for 10 days. It's free. See you on the charts.